Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Monday, the 25th of April, Bull versus Bear webinar. Steve Miley on the call for Trade Day. Welcome, everyone. We're going to go through our usual regular run through today with a slight difference on it being a Monday. And then we'll take a look at what I like to call the shape of the week. So we'll take a look at the macroeconomic and the earnings data, not just for today, but for the week, to give us an idea of what's coming up. I know we're day traders at trade day, okay? However, it's good even as a day trader to know what's coming up in the week. It might give you a clue of whether the market's going to be more or less volatile today. If you've got more bigger events coming up later in the week, the markets could be less volatile at the beginning of the week and vice versa. So yeah, I think it's always a useful thing to do as a trader, to know what's coming up in the days ahead. So we'll kick off with the calendar now. On the trade day in here, update that I do, the weekly update that you can download from the trading room. Okay, you can go to whether the market research reports are, where the technical analysis, my daily technical analysis reports are. You can also then pick up this weekly report. I usually post it over the weekend. Today I posted it today. It's only just gone up actually today, just in the last 20-30 minutes. And yeah, just running through the recap. So actually we'll run through this with you guys anyway, but more hawkish comments. So this is what happened last week. Hawkish comments from the Fed, Bullard and Powell, particularly in here. More intense pressure from rate hikes. Also ECB, some of the hawks and the doves step into more hawkish. Earnings season last week, we saw a slight uptick, like Bank of America, for example, on the financials, having had some very negatives from some of the financials the week before. So some of the financials are positive. However, and we also had Tesla last week, which was positive, but Netflix in here was a bit of a disaster in the end. The stock plunged 35% at one point. And then over the weekend as well, Macron was re-elected. President Macron was re-elected to office. And that should be kind of a positive. It's been a positive for the euro today, should be a positive for European stock indices relatively as well, but stocks are down because of concerns regarding China, which I haven't actually mentioned in here. That's something that's really come up more through this morning. So growth tech stocks led stocks lower in the US last week, but value stocks also pushing significantly lower last week, and global stock averages lower as well. The primary driver being that more hawkish tone, hawkish Fed, higher yields, so bonds selling off to higher yields, and then stocks plunging lower in here. The dollar stays king. Dollar is the strong currency across the board in here, and even last week, the back end of last week, saw a significant sell-off in the risk currencies, and we saw stock indices go lower. The risk currencies, the commodity currencies, Australian, New Zealand, Canadian dollars all plunged lower. Also, the pound plunged lower last week. Euro holding in as the ECB has shifted to slightly more hawkish, and also because of that positive French presidential result. On the commodity sides, commodities all down. Stronger dollar not helping commodities. Gold having broken out to the upside, moved back lower last week. Oil moving back lower, and also copper. Let's take a look in here. I'm going to just scoot ahead to what we've got coming up in the week in here. On the data and the earnings front, but I'll cover these again. But so today we've already had this German IFO business service. It's very like data calendar actually. We get US durable goods tomorrow, and also consumer confidence. Australian CPI, and Lagarde, the head of the ECB, is speaking on Wednesday. Thursday brings the Bank of Japan interest rate decision statement and press conference. We get German CPI, US GDP and PCE, and German GDP, EU GDP, US PCE and Canadian GDP all on Friday. The standout really data for me is going to be the US GDP data and PCE data. PCE the most important. Remember the PCE, personal consumption expenditure data in here. So what the Fed tells us is the inflation numbers that they watch. Okay, we get them released. For whatever reason, they release them over 2 days in here. We get the month on month and the year on years and the quarter on quarters released at different times. So we get them on both Thursday and Friday, so we're certainly watching out for those. On the micro side, on the earnings side, a big week for the tech sector. Microsoft, Google, which is Alphabet, Meta, old Facebook, Apple and Amazon all reporting. Okay, so Microsoft, Google, Meta, Apple and Amazon all reporting this week. And if we go and look at the earnings calendar, just looking for today, we've already had Coca-Cola out in here today. So remember, I filtered this by just the bigger companies in here. Tomorrow we kick off with those. So we get Microsoft and Alphabet, which is Google. Also get Visa and PepsiCo, maybe watching out for those. Through Wednesday, Meta, which is old Facebook, T-Mobile US as well, maybe watching for that. We've got Apple and Amazon, MasterCard on Thursday. Apple and Amazon, obviously the standouts. And then we move into the energy sector coming into the end of the week on Friday. ExxonMobil and Chevron coming onto Friday. As I say, I've already gone through a lot of what we're seeing here, but yeah, I've covered most of the. We don't really need to go through the macro data again in here. Suffice to say in here, that's just showing us all the. I've clicked on the wrong one there. We need not the CME one, the weekly data. But suffice to say, in here, I've covered most of what we've got going on in here. So yeah, we've covered all of what's coming up in the week. Let's take a look at 5 things to know to start your day. The big movement today was in a big sell-off in risk. A big risk-off move, sell-off in riskier assets, and equities are being driven lower. Asia, Europe, and US fears around the China's coronavirus outbreak worsening, rising cases in Beijing, maybe a lockdown of the capital, which is unprecedented. Obviously, Shanghai has already been locked down in here. So yeah, a lot of negativity coming out of China in here. The benchmark stock in it slumped the most in almost 2 years. The Chinese currency weakened more than 1% at one point. And Forex Live are noted in here as well. In here, I don't know. I mean, I'm assuming this has been a reaction to that. I don't think this was planned, but the PBOC, the People's Bank of China, have cut their RRR, the reserve ratio, by a percentage point. So that's kind of another tool that you don't usually see used. It's used by the PBOC. It's not used really at all often in Western economies so much. But the reserve requirement of banks in here, the reserve requirement ratio, you can't. I did try and click on this link. I'm going to just try it one more time, but the link was broken. Yeah, they got a broken. But basically they've cut. I think that's unexpected. And that's probably in reaction to the price action that we've seen today. So this is basically easier monetary policy, obviously trying to stimulate, given what's gone on in here with the sell-off in stocks, but also the concerns around rising cases of COVID in potential lockdown of the capital. These, I don't think anything in here is particularly interesting. I've got to run through this already before we came on. So more military support for Ukraine from the US. Elon Musk having a meeting with Twitter that went well apparently. Stocks lower, being pulled down by Chinese stocks in here. In Europe and US stock futures aiming lower. So if we take a look at European bourses in here, we're down over 2% in a lot of places in here, between 1.5% and 2.5%. Some even, Amsterdam, you're down 2 3/4. German DAX down 1.9. FTSE's down over 2. And we've got the CAC as well. Even the CAC down in here, given that we had the Macron win, and over 2.5%. So that's kind of disappointing. And what does that mean for US in here? Not as damaged as Europe, but nevertheless lower. Remember, though, the US went lower in here. They're not showing on here, but the US went significantly lower on Friday. Disastrous, very, very poor closes on Friday. Daily and weekly closes were very, very weak on Friday. And so what we're seeing in here, certainly, is then Europe playing catch up, and then more so because we're only down 1% here on the US futures compared to like over 2%. But remember, this US markets went lower after the European closes back on Friday. They're playing a bit of catch up in here. What else we have on the headlines? Stocks in Asia, US futures slide. Euro climb, so euro up. Crude also lower in here. Oil's lower. And dollar rallying strong in here as safe haven bid. Oil commodities lower. Oil sinks below $98. China's lockdown in peril. Excuse me. So WTI 5% on Monday. And then again, China lockdown angst rips through markets as stocks and the yuan plunge in here. That's the Chinese yuan, the Chinese currency. We've already covered those in here and all of that. So even more, this is even continues to tick higher, right? So basically nailed on now. The Fed Watch tool for May, the May meeting now, 97%, over 97% chance of a May 50 basis point hike now. And now looking here, this is now. So remember that we're currently at 25 to 50. So May, they're looking at currently 25 to 50, now 75 to 100. So that's up 50. Okay. And now though, going into here, this is for the June meeting. Now look, now kind of nailing on now up to 150 to 175. So that's up from here, from where we currently are, to 150 to 175. That's up 125 basis points, 1.25%. So more chance than anything else that between the two meetings in here, and given that we're only looking at 50 for the next meeting, they're kind of starting to nail on now. The market has priced in 75 basis point, a second hike, the second hike or the third hike in total, but between now and then, a hike of 50 in May, and then pricing in 75 in June. Okay, and only now a small chance of, well, hardly any chance of a 25. Now a less chance of a 50. So looking for maybe a more aggressive hikes. The Fed's not really telling us this, so this is very, very hawkish. What's getting built in. Okay, let's run through a few charts in here. So stocks obviously plunge, disastrous day. I read it was, I think, the last worst day in like 2 years, I think, for stocks on Friday. US averages, really bad day. And like, having kind of held around this 50% retracement, smashed through the 61.8, almost hit the 78.6 on Friday, and then down through the 78.6. This is the S&P. I don't even need to go to the 1 hour chart to tell you guys, this just looks terrible. Even what we're seeing in the last few hours in here, 1 hour chart, the last 3-4 hours, dead cat bounce. Why is it a dead cat bounce? Because dead cats don't bounce. Yeah. So there's the plunge lower Friday, lower again overnight through Asia because of the Chinese market down, and then no bounce in here this morning through the European session, the European morning, sideways. I'm not saying we're not going to retrace higher in here, but there's nothing good about this chart in here at the moment. You'd have to be wanting to go short. Now, if we go above this little high here, there's a glimmer of hope. So 42, 51, 75, but probably looking for liquidation pressures to come through. And it's the same story for the NASDAQ in here. So, lower on Friday, big, not as negative actually. So you did see value stocks, the broader market kind of underperformed, was a big worse hit on Friday than the NASDAQ. So you actually had the NASDAQ outperform unusually on the way down in here, and lower again in here this morning, getting close to the low that we saw from the middle of March. Here's the 1 hour chart. I'll move this back across here. Sorry. Yep. So in here, the 1 hour chart on the NASDAQ, again, though, look, dead cat bounce. In fact, we've made a new low within this hour on the NASDAQ. So looking very vulnerable there. Only could be short. Again, on the NASDAQ, where's the high in here? This swing high, this little overnight high this morning, 13,200, bang on. Okay, it needs to get back above there to start to ease these. Actually, no, it's higher than that. That's wrong. That's the low. 13,337. What we're talking about, 13,337. Only above there gives a glimmer of hope to the upside. Let's take a look at the commodity markets. Not looking too great themselves. Let's open up here. Remember on the June contract in here, starting off in here with gold. Here's the daily, lower Friday, lower again in here. So even though we're in risk off scenario, we should be bid for gold. The dollar is so strong. The negative impact from a strong dollar, remember, as positive dollar is negative for commodities in here as they're quoted in the dollar. So in here, we're seeing the dollar strength, meaning, and I can show you the dollar strength. And here we go and look at, it's a 5-minute chart, but I'll switch it when we get onto it to a daily. There's the dollar index, boom, boom, boom. And then, but it had been rallying anyway. We had 1.5 down days in here towards the end of last week. But then Thursday, strong candlestick back higher. Friday, really strong close, new multi-year high, and then higher again in here this morning. Dollar strength weighing on the commodities. So weighing on gold in here. Look, gold baking out from the, if you think all the bottom of the range really in here around this like 1920, 1919 area, breaking down through there, just came down to this spike low now. So very negative for gold, and again, if I step into the 1 hour chart, how can you buy that, right? Just, in the last hour has gone to new lows. I can't advocate buying this. You're going to have to switch back only above like here, really. 1922.8, then it gives you a glimmer of hope on the upside. Otherwise, I think you have to play it from the short side. Daily on the oil, June, look, so very much in a range. but rolling back lower, breaking through last week's lows this morning. Looks really negative. Again, it's difficult to sell though. We just said 5% down already on the day. You know, it's difficult to sell, but on the 30-minute chart in here, just widening it out a bit for you. You know, we've had a tiny little bounce in here and it's heading south again. You know, maybe this is a good sell opportunity in here for oil, you know, looking negative again. But again, it's 5% down. Do you sell it with it 5% down already? Probably not. But look, the oversold condition, 30-minute charts, already corrected from oversold. We're very oversold, come out of oversold territory. You've got opportunity to sell it again. It's probably even less oversold if I switch it to a 1-hour chart. So, yep. Yeah, what's come out of oversold? We're not quite actually coming out of oversold territory, so it's still in oversold territory. So there's no reason this can't go lower again in here today. So all looking negative. I'm not saying this is all risk off and all sell everything, guys, but it's certainly looking that way tomorrow. I'm actually going to just skip back and just go and have a look at the bond market in here. So bonds are actually going higher. We're in such a risk-off scenario in here at the moment. The bonds are rebounding. Even though there's that hawkishness that we have from the central bank, from the Fed, bonds went back, tried to rebound on Friday and higher this morning as safe haven. This is a safe haven bid for bonds in here. And if I get rid of this trend line, you kind of redraw the trend line. You got this kind of internal trend line. This one that comes down from here. So you got the main trend line would be here. And this is what I would call like an internal, this shallower trend line. So that's coming off the high from the 31st of March. So if I step into, I'm going to change this to a 1-hour chart. You know, so bonds going higher, not helping equities as you might normally kind of expect, because obviously the reason bonds are going higher is we're in this very risk-off scenario. So is that the 30th of March high up there? Yeah, it is. So let me just get rid of all the drawing tools. And then if we put in the trend line here, you've got to be watching this one here. Yeah, we're still some way off that, but you have got above this high in here, so you've got a bottom in bonds. So probably looking to buy bonds on the next dip. But watching this, I mean, if this starts to go back higher in here, you could actually get to the point of higher prices, lower yields might start to help equities. You might see bonds rallying and equities getting a rebound. But at the moment, I think you have to play it from a risk-off position. But, you know, happy to switch. I'm happy to flip this. If, you know, those levels that I've already marked in here, actually, still on this tab. You know, these high, you know, the highs, the overnight highs on S&P, if it takes out this high here, this little overnight high on the S&P, similar on the NASDAQ here, we're giving you the numbers. This one here from a few hours ago starts to take those out. This could easily get a correction back higher. So watch out for that. It's often the case that when we had this sell-off in the US, in the pre-US hours, the US rebounds. It's when we haven't sold off, when we've actually rebounded in European hours, then equities, the US market tends to hit the bid, right, as it rebounds. However, when we've already been sold off in US hours, they sometimes come in and see value. You know, okay, do we care that China's down? Do we care about the lockdown in China? We still see value in US stocks and they get bought. So I'm not saying it's not going up. At the moment, the chart's telling me down, but if it takes out this peak in here, here's on the NASDAQ, and the same one on the S&P, so that's like the overnight high in here, this little one in here, the more recent high for the last few hours, then we could easily see things turn back higher. Okie dokie, I'm going to wrap it all up there. I'm going to wish you all a great trading day. Stay safe. I'll be back with you with another Bull versus Bear webinar on Tuesday. Till then, goodbye.